Inflation data reveals grim reality for Australian households. Cash-strapped mortgage holders are being warned they may need to find an extra $2,192 per year as inflation becomes uncontrollably high. Obviously, that's a headline in a news article. So obviously the inflation numbers came out recently that they've increased. So I'm going to go through a couple of articles. Again, guys, I'm not a huge fan of some of these news articles, but we're going to talk about it, get my opinion, and go from there, guys. But if you have any questions, please DM me or ask the questions below. If there's anything you want me to talk about in terms of long form stuff, let me know. All right. So we've got a couple of things here. Obviously, the inflation numbers have gone up. The Reserve Bank of Australia's all-important trimmed mean inflation rate for the 3 months until December came in higher than expected at 0.9%. Obviously, that's I think a lot of people predicted if it hit over 0.8, that there'd be some interest rate rises. So I think we'll find next week that the hands will be tied. Or 3.3% for the year, up from 3.2%. The headline inflation, which includes volatile items, was 3.8% for the 12 months till December, up from 3.4% in the 12 months until November. So it's steadily rising. It's rising pretty aggressively. According to Zift customer finance expert Joel Gibson, Wednesday's inflation numbers, combined with the end of energy rebates and rising health insurance costs, are smashing household budgets. All of these increases combined would mean an average Australian household would need to shell out another, over $2,000 over the course of the year. He points out that inflation pain is widespread, hitting power bills, rentals, and mortgages. These aren't the things you can avoid. These are key. The key is to focus on savings that actually move the needle. So he's not talking about, $30 a week on coffee. Meanwhile, BetterShares chief economist David Bassanese forecasts the hotter than expected inflation figures mean interest rates need to rise in February. All up, it appears to be game, set, match for a rate rise at the February policy meeting. My best case is that the RBA will raise by 0.25%, taking the cash rate to 0.85%. Mr. Bassanese warns mortgage holders that a rate hike in February may not be the last one. Yeah, I think there's potentially 3 or 4 this year. There's talk that it's anywhere from 0.6 to 0.9. The RBA might also raise rates again in May policy meeting. To my mind, 2 rate hikes, given our indebted and interest rate sensitive economy, should be more than enough to dampen economic growth again and rein in ongoing inflation pressures in such areas as housing, travel, and hospitality. Yeah, travel's gone up. I'll pop in the inflation rates in here as well. Markets immediately increase the odds of a rate hike. So the likelihood, this is an article from this morning's, in a February rate rise was bet at 60%, and now it's at 70%. I dare say that as the day goes on, as the week goes on, it's probably going to get closer to 90%. Meanwhile, Australian Bureau of Statistics head of price statistics, Michelle, whatever the last name is, said the largest contributor to inflation was housing, rental, which jumped 5.5%, while the food and non-alcoholic beverages were up 3.4%. The RBA will be watching the data closely as it continues its battle to get Australians' inflation rate between 2 and 3%. So obviously we're at 3.8, so a bit to go down. It meets next Monday and Tuesday with Governor Michelle Bullock to announce the board's rate decision on 2:30 on the Tuesday. So again, we talked about a trimmed mean inflation rate by 0.8%. The rates would go up, and it's gone up at 0.9, so that's going to happen. Vanek, head of investments and capital markets, Russell Chelsea, labelled Wednesday's inflation data as controllably high. Inflation is not moving decisively in the right direction, with unemployment still low at 4.1%, household spending resilient, and property prices continuing to rise. It is no longer a question if rates move higher, but when the RBA acts and how many hikes ultimately follow this year. I think it's potentially more than 2. ANZ. ANZ thinks it's a one-off. They don't think it's going to be multiple, but they do reckon it will go up Tuesday. We now expect the RBA to raise rates by 25 basis points on 3rd of February. The return of inflation in components with the housing group, namely new dwelling purchases and rents, is also likely to raise concern at the RBA. The ANZ economist believes that that February the rate rise should be the only thing the only one that's needed. In the wake of interest rate increase, we would anticipate material softening in leading indicators of activity such as auction clearance rates, consumer sentiment, and business conditions. What's interesting about this is that, if we look at the numbers of settlements a month, it's 60% owner-occupier and 40% investors. So two things. First, home buyers are very keen to get in, and there's been all this release of extra money and extra funding to contribute to these purchases. For the young person who doesn't have patience, they're going to purchase property. On the other hand, you've got investors. They're not interest rate sensitive. I'm talking like 70% of investors are not interest rate sensitive. Their objective is just to keep purchasing. The objective is to be in the market. They don't care about rate, right? If they're spending an extra 15 grand on a negatively geared property, that's okay, because potentially the growth of the property is 100K. So, if you spend 15K and you still earn 85, I think a lot of people take it, right? So I don't think one rate rise will do the trick on this. I don't think so. This is interesting. Like, I do think two things that bring down inflation numbers is obviously interest rates, and in addition, probably unemployment. So if unemployment's high, it brings down interest rates because there's no one spending money because they don't have jobs. But our employment rates are really, really low. So I don't think we're going to see a drop. I think we are going to have another rise in May, and it's going to really depend on what happens after that. But some other factors that I was looking into that have contributed there, we've talked about housing. So that's rents, that's, funds for new purchases. And there's also construction. So housing costs is making up nearly 22% of like the total CPI, right? So it's when we look at immigration and inflation and all those things, we obviously need to be building more. We've discussed that in my previous video, that we need to be building 240,000 properties a year. We're only building about 180. But if we build more and spend more on these materials and builders and all these types of things, inflation is going to go up. So we need to build more, but we also need to bring the inflation numbers down. So where they're going to punish it are the mortgage holders, right? Mortgage holders are a really good position cash-wise. We discussed that nearly over 80% of the market have 4 years in savings. So it's going to be interesting. I don't think this is going to bring it down. First home buyers are still going to want to be buying. Our economy still needs to be constructing because we have undersupplied housing for two reasons. One, we have a lot of Aussies, and number three, we have immigration coming in, so we have to be building, an extra 60, 70,000 more properties a year to keep up with that number, which means inflation numbers are going to go up. Guys, this could be, it's definitely February and May rise, but we could see a total of five or six rate rises if building is going up so much and people keep purchasing property and people keep having to spend more on rents because of the undersupply. I don't think we're there yet. People are spending their money too, right? So I think a couple of things I believe that needs to be looked out for. One, I think you just need to have your mindset in the right position. Do you care about property? Do you have cash and you want to buy? Well, maybe the best way to curb some of the losses you're going to receive this year is buy property that's going to grow, and if you sell, you're winning, right? And yes, you have to pay tax and all those things, but this is not going to be the last rate rise. I do think the next inflationary numbers, I think we're going to tip over 4% in terms of the cash rate. I think at least another 0.2 to 4 on the trim number as well. Watch this space, guys. I don't think it's going to slow down. Have as much savings as you can, guys. I think trim what you can, whether that's insurances, whether that's the right insurances, but just look at things that's wasteful. And I'm not talking about your $20 thing here or there. That's not going to move the needle. It's going to be bigger things, and there's only one way to beat inflation, and that's buy property, because it's going to grow faster than inflation. The numbers show it. If you look at the data, typically inflation is outgrown. Jump on it, guys. I don't think it's going to stop. Best of luck. DM me if you need anything.